Hi, my name is Amita and I'm a product manager at Flow Systems Limited. Here I lead our trade finance platform FinFlow, where we help traders, trade financiers, and even fund managers manage their day-to-day operations. We're also extending our capabilities on-chain with our new platform. The goal is, with the help of digital assets and tokenization, to make trade finance more accessible globally. So I'm super excited to be here today, and thank you so much for having me. I think the TFT Trade Finance Forum is a great platform to meet like-minded individuals, understand industry pain points, and also discuss how the products can shape the next decade of trade finance. I think digital assets do have a great practical utility in trade finance. This is because tokenization itself is the act of converting real-world assets like your invoices, receivables, etc. into digital assets, which can now be transferred, audited, and settled with far less intermediaries. So how this benefits is that there are going to be way less people involved, and tokenization literally facilitates that. This obviously will reduce the cost as well in the long run. There is an added benefit of distribution. This is because tokenized assets can again be fractionalized and sold to multiple investors, which unlocks new liquidity like never before. While adoption itself, I would say, is in its early stages, I wouldn't say that that is a prediction anymore because the gains are quite measurable. And I think that the impact that we're going to see in the next 10 years or so in the era of blockchain is going to be quite massive. I think digital assets do more than just repackage funds. They completely change how the capital can move. Because in today's market, a large portion of liquidity cannot really reach trade finance. And this is because of operational hurdles, onboarding friction, etc. And tokenization helps you remove these barriers. And like I mentioned earlier about fractional investment, we can now divide these tokens into different fractions and sell it to multiple investors, which is opening up the investors to a whole new asset class. We're talking about crypto funds, stablecoin treasuries, alternate asset managers, etc., who are now going to be interested in investing in trade finance. While it is true that the funds would have reached the destination anyways, I think we are expanding that pool dramatically. So I wouldn't really call it repackaging of funds. I would rephrase it and say that is market expansion. I think one of the biggest concerns or problems that people have consistently faced in traditional trade finance is related to fraud and the issues of data manipulation, falsifying documents, etc. So when we move it on-chain, one of the biggest advantages that we can get is the security that it offers. This is because a blockchain introduces something called an immutable audit trail, which means that any data that is published, it cannot be destroyed, it cannot be tampered with, and if it is changed, then everyone involved is going to be alerted of it. This massively reduces the risk of fraud. And with the help of smart contracts, we can enforce rules that will automate certain workflows. For example, we can have a deal-proof contract, which has got a set of rules written in it, which states that if these conditions are satisfied, then funds can be dispersed. This helps in reducing any human-prone error as well. And from a cybersecurity perspective, I think there's a massive advantage because the data is now stored in nodes and it reduces the risk of any single point error, which is again a concern that happens in traditional trade finance. So I would say that security is definitely one of the biggest advantages and probably the most appealing things. What makes me really hopeful is that finally, with digital assets and tokenization, we can meet the market demand. Because as of today, there is a $1.7 to $2 trillion gap in the trade finance industry. And this is because the traditional processes are quite cumbersome. Traditional banks do not really want to finance these small-scale SMEs because there is a lack of visibility, there are compliance issues, and the whole process turns out to be quite expensive. And a lot of small-scale SMEs are not able to reach the liquidity that they need. But again, with tokenizing these funds and unlocking new liquidity, opening it up to a wide range of investors, I think we're finally going to be able to meet this market demand. I don't think that we are going to be replacing traditional trade finance in any way. I think that we're going to be enhancing it by moving it on chain. This is because trade finance as an asset class is going to be more transparent and more accessible to all. And that's exactly the kind of future that we want to build with our products, where we help with FinFlow, we want to help digitize trade finance operations, and we want to expand it on chain with our blockchain platform.